Things are getting heated in the crypto industry, and every investor seems to be on a thin edge. Be careful out there. You might annoy a frustrated crypto investor. How do we navigate this tumultuous season? By setting bullish expectations and predictions? Well, let's see if it will work for Cardano ADA. Whether we can see it or not, Cardano has been improving tremendously. According to a report from the crypto intelligence platform, Masari, the Cardano blockchain activity in the second quarter grew in both value locked and transactional metrics from the first quarter amid technical improvements and a rise in developer interest. While decentralized exchange MintSwap showed the largest absolute growth, several new decentralized applications or dApps also contributed to the increase. Masari said, the report, which was commissioned by Cardano developer Input Output, compared second quarter developments against first quarter figures, noting that while transaction activity grew, the number of active daily users decreased by 4%, the fourth drop in address activity in the past 5 quarters. The report stated, the ratio of transactions to active addresses have been growing steadily over the past 5 quarters, suggesting that the average user is more active now than they previously were. In quarter 2, the transaction active address ratio of 1.19 was up 6.1% quarter over quarter and 13.2% year over year. Plus, blockchain load, a measure of how much data is contained in blocks over a certain period, rose to 50% from under 40% in previous 3 months. It peaked at 81% in May. DeFi Llama data also reveals that $175 million worth of tokens is locked on Cardano, the highest level for this year, but still about 50% below a lifetime peak of $340 million hit in May of 2022. Such activity came on the back of the key Cardano upgrade since the start of this year. A change to reduce epoch transitions and make the blockchain smoother for network users took effect in June. And just in case you don't know, epochs refer to the periods on Cardano, with one epoch lasting 432,000 slots and each slot being 1 second. ADA tokens are staked during these epochs and new blocks on the Cardano network are produced, potentially increasing demand for the tokens as block rewards become more lucrative based on activity. Also, in March, a feature on Meta, a network that connects blockchains to the Ethereum virtual machine, began to permit Cardano blockchain users to gain access to EVM smart contracts with any Cardano ADA wallet, thus expanding the ecosystem's usefulness. Then, Cardano developer Sebastian Nagel, a contributor to its second layer solution Hydra, shared details of its upgrade. This release went live amid yet another wave of Cardano skepticism coming from devoted Ethereum maximalists. Cardano Hydra, a second layer scaling solution, had its version 0.12.0 software build published recently. Release notes and a summary were unveiled by Nagel on his Twitter page. As pointed out by Nagel, the new software is fully compatible with Cardano Node version 8.1.2 client and the novel signature protocol Mithril developed by Input Output Global. Launched on the mainnet on July 30th, it is targeted at optimizing the process of node synchronization on Cardano ADA and making it more developer friendly. With the new version 0.12.0 build, Cardano's Hydra started operating new application programming interfaces, which make it more accessible to Web3 developers and researchers. The developers also introduced several code optimizations so that Hydra's on-chain performance and security accomplish new milestones. We don't have all the answers, but this Layer 2 protocol is set to make the Cardano network more scalable and advance the performance of its decentralized applications. Hydra's launch is among the most impressive milestones for Cardano this year. Even the Cardano founder, Charles Hoskinson, agrees with this fact. Charles Hoskinson reaffirmed the commitment to scaling Cardano ADA with both Hydra and Mithril. Last week, he opined that this way of scaling is mutually beneficial for various parts of Cardano ADA's design. Hoskinson tweeted, "It's getting Delusion Town now. Hydra is live on the mainnet and evolving fast. Mithril is live as well and the first step towards a rich DA and light client strategy. We've already designed a significantly better way of handling transactions via tiered pricing and Babel fees." Meanwhile, he added that Ethereum is competing with its Layer 2s and is being eaten by them step by step. This was a response to a troll who suggested that Hoskinson would drop Hydra by the end of the year. Nonetheless, the non-fungible token market is also basking in a noteworthy shift, with Cardano NFT's floor price index currently standing at a 22% higher than Ethereum's as per data shared by Stockwits NFTs. This comparison reveals a budding interest in Cardano as a platform for NFT trading, although Ethereum has been historically dominant in this realm. However, despite the impressive growth in Cardano's NFT floor price, it continues to lag in terms of overall trading volume. According to recent data from CryptoSlam, Ethereum still dominates the market with a huge total trading volume. In contrast, Cardano ranks 9th in trading volume. This discrepancy points to the notion that Ethereum remains the most popular platform in terms of sheer trading volume, while individual Cardano NFTs are gaining in value. The StockWit NFTs tweet further raised the question when projects migrate to Cardano. Perhaps this tweet was hinting at a possible migration of projects from other platforms to Cardano in the future. Such migrations could be a result of Cardano's NFT price surge and the potential benefit it offers as an NFT platform. Regardless of the euphoria, it's essential to approach this shift with cautious optimism. Cardano shows promise in the NFT sector, but Ethereum's established foothold, supported by higher trading volume and larger user bases, means that it remains a significant player in the market. Well, things may look good for Cardano, but the general crypto market has been witnessing swings, which ADA is not immune to. Long-term investment does remain key, but sometimes we need sustainable assurance that will keep us going. Cardano ADA has not provided such. Recently, Bitcoin price dived, crashing more than 10% and dragging down Ethereum, XRP, and other major cryptocurrencies like BNB, Cardano, Dogecoin, Litecoin, Solana, Tron, and Shiba Inu, despite cryptocurrency exchange Coinbase passing a critical milestone. Right before the sharp crypto crash, the former US Securities and Exchange Commission official warned that BlackRock's landmark spot Bitcoin exchange traded fund bid is doomed to fail, hence casting doubt over the recent Bitcoin price rally. My take is that the current SEC will not approve of a Bitcoin spot ETF application for a range of compelling reasons. Stark, the SEC former Office of Internet Enforcement Chief, posted to X. Stark referred to an analysis by experts at Better Markets that found spot Bitcoin markets have a history of artificially inflated trading volumes due to rampant manipulation and wash trading, are highly concentrated, and rely on a select group of individuals and entities to maintain Bitcoin's network, to explain why he expects the SEC to block a spot Bitcoin ETF. However, the hype surrounding BlackRock's spot Bitcoin ETF bid revitalized the Bitcoin, Ethereum, XRP, and the crypto market in June, fueling a slew of rival applications as asset managers rushed to challenge the world's largest asset manager as the first to market. But the SEC delayed a decision on approving or denying the spot Bitcoin ETF proposed by Cathie Wood's ARK Invest Management, setting up what seems to be a closely watched flurry of decisions in early September, with applications from Bitwise, BlackRock, Fidelity, Invesco IVC, WisdomTree, VanEck, and Valkyrie all on the docket. What can we say? Crypto is having a rough time, and it's better to come to terms with the truth. Crypto regulations are moving forward on a federal level. The Biden administration has put together a highly qualified team to steer the cryptocurrency regulation process, led by the U.S. Treasury Secretary Janet Yellen and Gary Gensler, the SEC chair. Yellen has been tracking the sector for years, although sometimes taking a skeptical view. When 2022 rolled in, cryptocurrency investors were on edge. The price of the leading token Bitcoin was up 61%, and Ethereum had climbed 409% in 2021. But the last massive surge in 2017 was followed by an ice bath in 2018, and the leading coins started to trend downwards in November of 2021. As it turned out, the mostly positive market momentum of 2021 was overwhelmed by the bearish trends in spring of 2022. The stock market dipped due to surging inflation, Russia's invasion of Ukraine, and other macroeconomic challenges. Cryptocurrencies followed suit, falling back much faster than the S&P 500 in this period. As certain issues developed and are resolved, the long-term future of the cryptocurrency sector will take shape. However, even though we don't like to say it, in the very long run, it seems unlikely that any government or group of nations will stop the cryptocurrency idea entirely. But they can slow down momentum and steer the final product in various directions. These risks might sound hypothetical, but they are very real. In the end, the cryptocurrency community must get along with regulators around the world. Nevertheless, don't bet the farm on Bitcoin, Ethereum, Cardano, or crypto in general. This market tends to move in mysterious and unpredictable ways, skyrocketing one year and crashing down in the next. A string of heartbreaks is the last thing you want to experience right now. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.